Hey guys, welcome to another video. Here I'm going to be talking about asset leasing and how you can set up leases in Dynamics 365 Finance and Operations. I got for you here a finance lease example, and I wanted to walk you through in Excel first so that you get a high-level overview of what we're going to be processing in Dynamics. And right after that, we will get into D365 F&O. So with that, let's go ahead and get started. So here I have an Excel spreadsheet where I am tracking a lease manually. So for our company, we have Dell computers that we lease from Dell. And here is this example. This is a laptop. We know that the commencement date of the lease is January 1st of 2023. The total installments we're going to make is 36 monthly payments. The payment amount is $90 a month. And the fair market value of the laptop is $3,500. So fair market value just means if we were to pay for the laptop cash today, how much would we pay? Then in the annuity type, we see here that this is an ordinary annuity. What this means is that the payment is due in arrears or at the end of the period. So let's say, for example, here, where the period start date is January 1st of 2023, we see that the payment date is not going to be due until January 31st of 2023. Now, if you had an annuity due, in that case, your payment would be due at the beginning of the period. Annuity due is also called payments in advance. So just keep that in mind as we go and set this up in Dynamics. So here I have my incremental borrowing rate. So what this means is if our company goes and takes out a loan today, how much interest would that bank charge us? That is an incremental borrowing rate. And here we have also the asset's useful life, which is 42 months. And we also see here that this is a finance lease. Now we will get to the lease classification here in a bit, but just take a note on that. It could either be a finance lease or an operating lease according to US GAAP. So with that, let's move over now to the payment schedule. So here's a payment schedule. Here, all we're saying is how many periods do we have? So in our case, as I said, we have 36. We are keeping track of the period start date, the payment date, the payment amount. So here, all our payments are $90. So that's pretty straightforward. Now, the present value calculation, this is important for two reasons. First, you're going to use it to determine what the initial value of the RU asset and liability will be. And the second reason is you also use it for one of the lease classification tests. Now, to calculate the PV, you can use a PV formula in Excel. Just remember to divide your incremental borrowing rate by 12. Because there are 12 months in a year, and that is an annual rate. So with that, once you have that set up, you can sum these here, and that will be the net present value for all of the payments. So just take a look at that amount because that is what we're going to use here for the beginning and BV, or net book value, in the asset depreciation schedule. Now, the next column here is going to be the depreciation amount. Now, because this is a straight line, all you have to do is take the beginning net book value and divide it by the 36 payments. Then we have the accumulated depreciation. And lastly, you have the ending net book value. So the ending net book value is simply the beginning MBV minus the depreciation. Now, moving forward to the liability amortization, again, you're taking that same 2885.21. You are adding here the payments that we discussed before. Now, for the interest expense, you do have a calculation here. You are taking your beginning balance and multiplying it by your incremental borrowing rate, and you also divide by 12 because this is a monthly compounding. And lastly, you have your ending balance. You have here your beginning balance minus a payment plus the interest expense. Now, another thing that I want you to note here in this Excel is that once you are done doing your depreciation and amortization, both on the asset and the liability, you will finish with a zero balance. So that's what we're trying to accomplish here with these two tables. Now let's move on to the journal entries. So when you first sign your lease, you're going to have to put it on your books. And to do that, you're going to debit the right of use asset and you're going to credit your finance liability. And you're using that MPV of the payments as the amount. Then every month, you're going to have monthly journals that you want to record. So first will be the payment. And for that, you're going to debit the finance liability and credit the notes payable. Then to record the asset depreciation, you will debit the depreciation expense and credit accumulated depreciation. And lastly, for your liability amortization, you will debit interest expense and credit the finance liability. So the other thing that I wanted to get back to is the lease classification. One of the nice things about Dynamics is that it can help you automate the lease classification. Here we want to determine whether we have a finance or an operating lease. According to US GAAP, you have 5 different tests. If any of these tests is a yes, then you have a finance lease. If all of these tests are a no, then you have an operating lease. And one of the nice things about Dynamics is it can help you automate the classification. And I'm going to show you some of that setup. So the first test here that you can see is the present value divided by the FMB. And once again, the present value is that total that we calculated here of the payments and divided by the fair market value of the piece of equipment. So here we have 8243. It is not greater than 90%. So then we want to move on to the next test. So here we're saying if the lease term divided by the asset life, and you're just taking this 36 months divided by these 42, and we are getting this 85.71%, which is greater than the 75%. So that means we do have a finance lease. Now, we could stop here because only one of these has to be true. But just for your information, know that there are 3 other tests: the transfer of ownership, the unique asset, and the purchase option. So with that, let's go ahead and jump into Dynamics to set this up. So we're here in Dynamics. Let's go ahead and set up this lease in the system. So first of all, asset leasing, if you don't see it here, go to Feature Management. And go to All, search for asset leasing, and enable it. Mine is already enabled, so I don't have to do it, but this is where you would enable if you don't see it. So let's cover a couple of setup items before we set up this lease. One is lease books. If you go to Setup, click on Lease Books. Then you have here your IFRS 16 and your ASC 842. Now, like I said, the lease classification can be done by Dynamics. If you have this as automatic, then you're going to have your percentages that are going to be used in the calculations. Here is the 75% that I mentioned, as well as the 90%. So just keep that in mind. Then let's go over to the lease groups. So the demo data comes with buildings and vehicles, and I have added here laptops. And then what you do is you make sure that the laptops have the book attached. And then the other thing is in the asset leasing parameters, if you go to accounts, you got to make sure that all of your accounts here are set up for your new group. And with that, we can go ahead and get started. So go to Leases, Lease Summary, click on New. Now this is a Dell 2500, fair value is 3,500, incremental borrowing rate 769, asset useful life 42 months. There is no transfer of ownership. It's not a unique asset. Lease group, we said this was laptops. And annuity type, yeah, make sure you get this one right. This should be an ordinary annuity. Vendor account, Acme. And the only other thing we need to enter here is the lease start date, January 1st, 2023. Now, if we go to the payment schedule lines, switch this to months, put 36. And we're going to do 90 here, $90. So really that's it, guys. I am ready to create my schedules. Once you do that, now you have books available. So click on that. And now here, I can see my USMF 018 ASC 842. If you scroll down here, you can see there's a lease classification test. So this is what I showed you in Excel. And it determined it was a finance lease. So now we can look at the payment schedules. And what I want to do is maybe compare this to my Excel spreadsheet, right? If you guys remember this amount, the 285.21, so that really matches up to the penny. So that's good. It means my calculations are right and I can rely on it. So what I'm going to do here is confirm schedule. And once again, these are the similar columns, right? This is your payment amount and this is the PV of the payment. So once you do that, you close it, you are able to perform this function, which is the initial recognition. So that is the first set of journal entries that we looked at. And if you go to asset leasing journals here, then I can see my debit to the ROU asset and my credit to my finance liability. So I can go ahead and post. So now let's say that you want to post your monthly journal entries, right? There were the payment schedule, the asset depreciation schedule, and the liability amortization schedule. So what we're going to do is first go to the payment schedule and just hit create journal and close here. Go to invoice journals. And here I can see that I have a debit to my finance lease liability and a credit to my vendor and notes payable, right? So I'm going to go ahead and post this. Looks good. The next one is the asset depreciation. So just click here, create journal. Now we can either go back here to asset leasing journals, select the second entry here, and now you can see the debit to depreciation expense and a credit to accumulated depreciation. So I will post. And the last one is a liability amortization schedule, create journal. And instead of going to that other screen, we could also click here under journal number and lines. Here I have my debit to interest expense and my credit to my finance lease liability or lease obligation. So I will go ahead and post. So really, guys, that's it. That completes the process there. That's what you're going to have to be processing every month. Now, another thing you can do if you have several of these, you don't want to do them one by one, is if you go to periodic, you have a batch journal creation. So then you can use this to create the different journals in batch. So that's the example I had for you guys. Let me know your thoughts or if you have any questions. I might do a second video on leasing for other types of scenarios. So let me know in the comments if you would like to learn a little bit more about asset leasing. If you like this video, please like and subscribe, and see you next time.